Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. October the 14th, 2016, and this is the Daily Report for Gold and Silver, our weekend review, in which we combine it with trending markets to give you an overall sense or feel for activity this week in the markets, as well as our forecast for next week. Gold closing off on a low note, but holding very, very steady throughout the week, closing off about $5 when we look at COMEX. COMEX down 470 at 1252.90, traded to a low of 1246.90 and a high of 1260.70. When we compare that, of course, to Forex or spot gold trading at 1251.96, net change off about $5 again, or about 0.4%. Over to silver. Silver currently trading off nominally 6 cents lower, 17.40 and change. The low 17.32 and the high 17.58. That, of course, is spot. And then lastly, when we look at COMEX futures, 17.43, and then the net change is about 0.2%. Let's take a look at our first gold chart. So traders, on today's report, I do want to cover two basic topics as far as gold goes. The first one is a trade that we put on just the other day in which we recommended going long gold. We got in the market roughly at 12.59. We have stops below 12.40. Market's closing roughly 12.52. So it is closing against us about $6. But I believe that there is a real opportunity here, and I am getting very bullish on gold for a couple of reasons, and the reasons are as follows. First of all, we are looking at a daily chart, and on this daily chart, I have put a basic fib retracement that covers the entire span of this year, this being December here, and the beginning of the year. Market is trading roughly at about 10.50 per ounce. It runs up over time, and by, let's say, the beginning of July of this year, we've got our yearly high coming in at around 1378. Now, from there, we meandered sideways for a couple of months, and then over the last couple of weeks, we broke substantially and hard to the downside. Now, when we look at this particular retracement, meaning this move here, and then calculate a 38% retracement point, that takes us pretty much precisely to 1250. So for that one reason, I believe that we have the real potential in this particular area, should this particular price point hold, that this will be a bouncing point, so to speak, for gold to move to higher pricing. The second thing that has really kept me looking at gold from a bullish standpoint is over the last couple of weeks, the dollar, US dollar, has just been extremely strong, moving up 5 points overall from 93 to 98 on the dollar index. And last week, it absolutely devastated gold trading. This is the result of what we saw last week, this big drawdown, so to speak. In fact, let's go ahead and move this to a weekly chart so I can better show you what I mean. Last week, the dollar was extremely strong. And what we saw as a net result from that action is gold moving from 1320 right in here down to these lows just at around 1241. Now, take a look at the activity we've seen this week. Dollar pretty much just as strong this week as last week, but nowhere near the movement. In other words, when you look at how strong the US dollar was this week and last week, and you look at the effect that it had on gold last week and the effect that it had this week, there's absolutely no doubt. But we are seeing the fact that gold did not sell off hard this week, and the fact that it really kind of leveled off at this particular fib point. Well, to me, that's extremely bullish sentiment, and that is part and parcel the factors that went into us initiating a long position in gold. Obviously, maintain your long, maintain your current stop. If you recall from the last chart we just looked at, which was a weekly chart of gold, we put a basic fib retracement from the low gold hit during the year to the high that it hit during the year. This is a silver chart. We're doing the same thing, going in from about 1366, and I've got it set at this top right here, just shy of 21 at 2085. And when we do that, of course, we get our various fib levels. Now, consider this. Silver shot up a lot more than gold. That's quite obvious. But when it came down, if you recall, gold stopped really here at that 38% retracement, where silver kept dropping to the 50% retracement. So on a technical basis, absolutely more chart damage than we saw with gold. Secondly, if we create a basic support line by fixing this low, and this low, and then extending that line up, we can see that last week's activity gave us a clear break below that point. And even though we saw this market consolidate this week, we never saw even a high go into that area, nor a closing price go into that area. It is for that reason that we went long gold, but kind of left silver out of the mix. And as we have been talking about, the US dollar has been incredibly strong for the last couple of weeks. Consider this. At the beginning of last week, dollar index was trading just above 93. It's now above 98. It's a 5-point rise in 2 weeks. It's a tremendous rise. Now, this week, as we talked about when we looked at gold, gold held up relatively well in light of a strong U.S. dollar. Now, traders, crude oil is closing fractionally lower on the day, $50.32 a barrel, but higher on the week. Actually, the last 4 weeks of trading, we have seen crude oil prices spike dramatically, trading from a low 4 weeks ago of about $42 a barrel to these recent highs at around $51 a barrel. So about a $9 rise per barrel over the last 4 weeks. However, as you know, we have put our target price on crude between 50 and 52. We are right within those parameters. We'll take a look at a crude oil chart, and I'll give you a sense for where I think it might go short term. So traders, as you know, I have had a price target of $50 to $52 per barrel in crude oil over the last 3 weeks. We're looking at a daily chart. On this daily chart, one of the studies that we have is a linear regression. I tend to call this our channel lines, and in this case, what we're looking at is bullish biased channel lines. Quite obvious, as we've seen this market really since middle of September go from just about $43 up to these highs just shy of 52. Now, 51.60, that is the former top. That matches quite eloquently with this current top that we saw. And we talked about the fact over the last, 2-3 trading days, that as we got near the top of the channels and saw a little bit of weakness, we were going back to this midpoint here. My sense is we'll probably trade back down the channel this way and lighten up over the next week or so. We've had this tremendous rise, so to see the market kind of retrace back a little bit wouldn't surprise me. And my target, if we see weakness in the market, is approximately $49 per barrel, and it is based upon this top right here. So traders, yes, gold is off on the day, off about $4.70. And yes, it is off on the week. It's roughly off about the same amount as we have it pegged for today. In other words, this week was an absolute week of consolidation within the precious metals markets, I believe, with gold absolutely finding a base at the lows that we talked about, that fib retracement level 38%, which is a retracement from the move of 1050 up to about 1370. So it's that yearly move that we're accounting for. It is now really corrected about 38%. And most importantly, in the light of a tremendously strong dollar, it has really held on to its value. And to me, that's an absolutely bullish consensus and sentiment. The fact that we didn't see a gold sell-off more briskly this week, to me, is a real sign of hope for the bulls. Now, we did put a position on yesterday, roughly in the area of where gold's trading at, a couple dollars higher than this. Our recommendation, obviously, is going to be to maintain your current long gold position and to maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.